Darad, and joining me my colleague Yatin Mota. Well, quite a heavy news flow day, Yatin, but yes, the markets took the ceasefire between India and Pakistan as a good news day, and we saw the same reflected on the headline indices. Sensex and Nifty are both formidably in the green, seeing Sensex definitely seeing nearly 3,000 points jump, and Nifty up about 3.5% above that 24,900 mark. So both the markets and the headline indices have seen the biggest single day rally in over 4 years. If you look at from the sectoral indices, Nifty Pharma, which closed flat in the green, apart from that, all of the majority of the sectoral indices have settled well positively in the positive territory. Nifty Realty and IT indices, they were the star performers of the day. Nifty IT index definitely after the US-China trade talks were concluded and the tariff proposals were contoured, we can see that the Nifty IT stocks definitely took to the day's highs as well. India VIX, on the other hand, that saw a visible cool off, about 15% or so to speak, indicating that the nervousness and tension that we saw last week amid cross-border tensions was down. Not just about the domestic front, but if you look at the US-China trade deal that the markets were waiting for, saw great progress. US levies on Chinese imports are expected to be reduced from 145% to 30%, whereas Chinese duties on US goods are expected to drop by about 10% from about 125%. So as a result, we saw that even the global markets, be the Dow futures, also jumped about 1,000 points, and even the European markets also opened on a positive note. So yes, all in all, a very good set of gains that we saw today. Yatin, what do you make of sense of the markets? A very heavy news flow days from US-China trade talks to ceasefire to even Trump vowing some, reducing the drug prices on pharma by up to 80%.
Yes, so I think a lot of news flows, Lovisha, and if you look at the markets, no one expected a ceasefire, no one expected a US-China trade deal. In fact, no one also expected a Russia-Ukraine dialogue. So the kind of news flows which came over the weekend clearly led the markets much higher than anticipated. In fact, the Indian markets were any which ways light, given the fact that there were trade, war issues, there were India-Pakistan issues to take over. So in general, the overall markets, seem to be light, and hence, almost a 920 points rally on the markets. Now, Sensex also rose nearly 3,000 points, and if you look at the advanced decline ratio, a key indicator, there, we saw almost a 12:1 kind of a ratio. So the market breadth was extremely strong, except for the, pharmaceutical index. We had most of the indices gaining very much above, 3 to 5%. Now, if you look at the overall Nifty 50, Cera Ceramics up 15%, Sirma, JBM Auto, RVNL, Jupiter Wagons, a whole host of these stocks are clearly gaining 10 to 15%. What was not doing well is IndusInd Bank, 4% down. Naveen Flooring post the quarterly numbers, saw some profit taking, down 4% for that one. BSC Limited, and remember this stock is at all-time high, hitting the market capitalization close to 95,000 crores. So, probably tomorrow or in a day or two, if the market remains buoyant, then BSC could hit a market capitalization of 1 lakh crores. So keep that stock in mind. Some profit taking in defense stocks, but stocks like ICICI Bank, Aster DM, Coromandel, APL Apollo continue to hit 52-week highs. Moving away from what worked in the market to what didn't work in the markets. As you mentioned, Lovisha, that pharmaceutical stocks clearly were under pressure. We had Sun Pharma, dipping in nearly 5% intraday after Donald Trump announced on Truth Social, one of his social media platforms, that he will sign an executive order for pharmaceutical industry today. Now, if you look at the pharma, cost, according to Trump, 30 to 80% kind of a pharmaceutical drug price cut is what they are looking at. They would give a preferred status to the countries which will provide them, cheaper drugs. And the condition that is laid down is quite surprising. The kind of product prices which will be in your country should be the same in the US. I don't know how will it work, because US FDA has a lot of quality issues, a lot of compliance issues, a lot of, fees and R&D which goes really into drug development and generic development. So to see whether or not it impacts Indian companies in the shorter run is something we'll watch out for. But if you look at JM Finance, they clearly believe that Indian pharmaceutical companies could be at risk, because many companies have nearly 40 to 50% of the revenues coming in from the US markets. Now, just to give you an update as to JM Finance view on this, the order could reshape the US pharma industry. Generic players like Lupin, Cipla, Dr. Reddy's, Zydus, Aurobindo and Sun could see downside risk to their earnings. In fact, the US biotech industry might also face disruption. So, on an overall basis, the pharma stocks are quite nervous ahead of that Trump executive order on the entire pharma sector.
That's right. Pharma stocks ending flat in the green at this point of time. And of course, the contours of what the pharma pricing model is supposed to be after Trump is announced on the most favored nation policy model also, that also we need to watch out for. But another stock in focus that was today, that was your shares of Yes Bank. That settled with about 2% gains, and in the past 3 days, it has gained about 12% or so. This came after Japanese financial conglomerate Sumitomo Mitsui Banking Corporation has acquired about 20% stake in Yes Bank from SBI and 7 other private lenders for about 482 crore rupees. Now, this is the largest cross-border banking sector deal which we have seen in India, and the transaction also involves SMBC purchasing shares from a group of other Indian banks, which includes the likes of HDFC Bank, ICICI Bank, among others. Now, these banks originally they had invested about 10 rupees per share during its reconstruction phase in 2020. So right now, all of these investors are potentially set to make a substantial gains of about 115% over the last 5 years. For SBI, definitely this deal is expected to boost its profits by about 7.5% in FY26. So that is what the potential figure has been. However, this deal is subject to approvals from the RBI and other regulatory bodies. So we will watch out on those developments too. Yatin, while it's a great news for Yes Bank, but we have seen how foreign bank shares have, rapidly eroded in India, be it for Citi in Axis Bank's case or even Standard Chartered for Kotak Mahindra Bank.
Yes, clearly, all of these stocks will be watched out for, but Yes Bank particularly, the deal is good, given the fact that SBI gets, almost 9,000 crores from this. It will help boost their overall capital adequacy ratio. Other banks also on a pro rata basis would be selling their stake. But more important is to get a Japanese credible name. We don't know if they will be included in the board, how really does the voting right work, whether or not RBI approval is required. So, a lot of things in process, but most probably it's a good move, especially for the Indian banking sector per se, because now we are looking at a MNC interest, which is now there in private sector bank.
That's right. But given that we have been seeing the fag end of the Q4 earnings season, let's talk about one stock in focus, that was your Swiggy, because from its days low, the stock recovered about 3% or so. After the street, despite what the weak performance of March quarter was seen, but the brokerages were quite bullish on the counter. Now, in terms of Q4, we saw that the net losses had doubled, but revenue figures saw a double-digit surge. The company also shared a revised guidance. It pushed its contribution of break-even period from the third quarter of FY26 to a range of from third quarter of FY26 to second quarter of FY27. Now, the positives from the Q4 report card definitely was its gross order value for the food delivery business, which was higher than its peer returnal, and food delivery margins widened to about 2.9% from last year. Now, what the brokerages are saying, Bernstein has maintained an outperform rating with a price target of 435. They believe that the company's delivery growth is expected to be impressive, but the quick commerce continues to be impacted by the higher competitive intensity. Citi has also maintained a buy recommendation to Swiggy and has cut a target price to about 425 rupees per share. On the other hand, if you look at JP Morgan, they have maintained an overweight rating, but they have slashed the target price on the counter to about 540 rupees per share. Yet in a weak Q4 performance, but brokerages seem to be very bullish on the counter despite what they have projected.
So I think, Swiggy numbers were weak. There is no doubt about it. In fact, they also guided that they will be breaking even much more later than what they guided earlier with respect to the quick commerce business. More importantly, I think the brokerages are bullish because of Zomato, because relative to Zomato, I think Swiggy is clearly commanding lower valuations, and probably the reason why brokerages still expect that versus Zomato, probably there is some value in the stock, but results clearly have been slightly on the disappointing side.
Yeah. That's right. But coming back to India-Pakistan, tensions that we have seen, we can see that the aviation-linked stocks rallied finally today up to about 7%. SpiceJet, Indigo, all of them, saw a good set of gains after India and Pakistan came to an understanding for a ceasefire. Now, easing border tension between India and Pakistan also has supposedly increased the hopes of normal airline operations, and even the Delhi International Airport also said that the airport operations continue to remain normal. However, they have issued an advisory informing that some flights schedules may be impacted due to uncertain conditions as well. The other regulators have also announced, earlier they had announced a temporary suspension of the civilian operations of about 32 airports across northern and western India, but now all of them have been resumed as well. We saw that the Nifty India Tourism Index also gained up to about 4% today. All of its constituents were trading with a good set of gains, and even the ticket booking platforms, be it the likes of Easy Trip Planners, IRCTC, they were also trading with about 3 to 5% higher as well. The fresh set of talks between the DGMOs of India and Pakistan that was slated to begin in the afternoon now will take place later in the evening, so you'll watch out on those developments as well. Yatin, a good set of moves with this, but whether the ceasefire holds or not is something that markets are hoping for and transpiring for in the coming next few days as well.
I think, when it comes to the army operations, clearly a salute to the Indian, Air Force, Navy, as well as the armed forces. The fact that India has been able to avert major, airstrikes with the help of its indigenous air capability, defense capability, and more importantly, we have one of the best in class equipments, deployed all across the border. I think the markets now are not really worried about the India-Pakistan standoff, because clearly we have proven that we are quite superior when it comes to land, air and sea. Rest assured, we can have a peaceful sleep in the night, all because of our armed forces. Most importantly, the DGMO talks, which are supposed to happen at 12, according to reports, it said that will happen later in the evening. But I think now it's a formality. Yesterday, the border war was peaceful on the western front. I don't think so. Now there is any room for escalation, but you never know. These are dynamic situations. But as of now, it seems the event is now very much behind us.
Well, that's the hope that it needs to be. But with that, we have come to an end of this edition of Closing Bell. It's a wrap from Yatin and me, and thank you for watching.